What if everything you were told about money is backward? What if your job, your identity number, your future earnings, your very existence inside the system are not signs of freedom, but guarantees on someone else's balance sheet? Here's the mystery. Banks appear to lend money they don't have, governments drown in debt they never repay, and yet the system never collapses the way we're told it should. Losses are socialized. Bailouts appear out of nowhere. Crises repeat, but the same institutions always survive. So the question isn't why the system keeps failing. The question is, what is it actually built to do? Tonight, we're pulling back the curtain on a disturbing idea, one that sounds extreme at first. It becomes harder to dismiss the deeper you go. That idea is this: your life functions as collateral for the financial system, not metaphorically, structurally. And once you see it, you can't unsee it. To understand how this could even be possible, we have to rewind far before credit cards, before central banks, before modern money itself. For most of human history, money was a thing. Gold, silver, grain, cattle. Lending existed, but it was limited by physical scarcity. If a lender overextended, they went bankrupt. Debt had teeth, but it also had limits. That changed when states discovered something powerful. They could monetize obligation itself. Early empires began issuing tax-backed currency. The coin wasn't valuable because of the metal, it was valuable because the state demanded it back. You had to earn it to survive. Already a subtle shift had occurred. Labor, not metal, anchored money. Fast forward to medieval Europe. Banking families perfected double-entry bookkeeping and credit creation. Loans no longer required full reserves. They required confidence and enforcement. But the real turning point came much later, with the rise of modern nation-states and central banking. When central banks emerged, they formalized a radical idea. Money could be created as debt. Every unit of new currency entered circulation already owed back with interest. Pause there. Think about the implications. If all money is debt, but interest is never created alongside it, where does repayment come from? From future production, future labor, future lives. This is where the story takes a darker turn. In the 20th century, the system accelerated. After major wars, governments were buried in debt. Instead of defaulting, they did something unprecedented. They fused state power, central banks, and private finance into a permanent structure. Currencies were decoupled from gold. Money became purely symbolic numbers in ledgers. But something else replaced gold as the anchor: human productivity. Birth certificates, national IDs, social security numbers, these weren't just administrative tools. They created standardized economic entities, trackable, taxable, predictable. You weren't just a citizen anymore. You were a future stream of payments. Governments issued bonds based on expected tax revenue. Banks used those bonds as collateral. More loans were created on top of them. Derivatives multiplied the claims, and underneath it all was a silent assumption. People would keep working. People would keep consuming. People would keep paying. Your lifetime earnings projected decades into the future became part of the collateral stack. Not your body, not your soul, your economic existence. This is why the system panics when birth rates fall. Why immigration becomes an economic necessity. Why unemployment terrifies policymakers more than inflation. Because fewer workers means weaker collateral. Now we move into the rise phase, the period where the machine becomes almost unstoppable. From the 1980s onward, credit exploded. Household debt replaced wage growth. Mortgages, student loans, auto loans, credit cards, entire lives financed forward. Banks didn't just lend against assets anymore. They lent against people's capacity to suffer repayment. Housing prices rose because credit expanded. Credit expanded because people could be locked into 30-year obligations. Those obligations were bundled, sliced, rated, and sold globally. Your mortgage didn't stay with your bank. It became part of a financial product backing loans you'll never see. At the same time, governments deepened dependency. Healthcare, education, pensions, all increasingly financial. Miss a payment and penalties followed. Fall behind and your future narrowed. Freedom was replaced with optional survivals, as long as you stayed inside the system. And the system grew confident, too confident. Which brings us to the breaking point. In 2008, the illusion cracked. Loans based on unrealistic assumptions collapsed. Not because houses vanished, but because people couldn't pay. The collateral failed. And yet, instead of letting the system reset, something shocking happened. Banks were rescued. It's not because they were innocent, but because letting them fail would expose the truth. That the entire structure rested on human obligation. Governments borrowed trillions to save private balance sheets. Central banks printed money on an unprecedented scale. Debt that should have died was transferred upward to states, and who backs states? You do. Through taxes, inflation, reduced services, longer working lives. The crisis didn't end the system. It revealed who the collateral really was. The fallout phase is where we live now. Productivity rises, but wages stagnate. Asset prices soar, but ownership shrinks. People work more, save less, and retire later, if at all. Debt is no longer a phase of life. It's a condition of existence. Student loans delay families. Mortgages dictate geography. Medical debt enforces compliance. Miss too many payments, and you're excluded from housing, employment, even basic dignity.
Notice the pattern.
The system doesn't need prisons for most people. Debt is softer, quieter, more efficient, and every proposed fix seems to fail. Debt forgiveness, partial and political, inflation control, temporary, regulation, rolled back when profits dip. Why? Because the system isn't broken. It's doing exactly what it was designed to do. Extract stable value from human lives over time. Now let's connect this to the present. Digital currencies. Central bank digital money. Real-time tax systems, carbon credits. Social scoring mechanisms tied to finance. Each innovation is sold as efficiency, inclusion, or safety. But look deeper. They'll tighten the link between identity and economic behavior. They'll reduce anonymity. They'll make future earnings more predictable and more enforceable. This isn't about one secret meeting or one evil group. A debt-based system must grow or collapse. Growth requires collateral. Physical assets are finite. People are renewable. That's the uncomfortable truth. History doesn't move in straight lines, but it does rhyme. Every debt empire eventually overreaches. Every time, the question is whether people notice before the cost becomes unbearable. Which brings us to the final part. So what are the takeaways? First, money is not neutral. It is a system of power and obligation. Understanding how it's created changes how you see your role within it. Second, debt is not just personal, it's structural. Your individual choices matter, but they exist inside a machine designed to pull future value forward. Third, awareness is leverage. Systems depend on silence. The more people understand the rules, the harder it becomes to exploit them invisibly. Here's the warning. A society that treats human life as collateral eventually stops seeing people as ends in themselves and starts seeing them as balance sheet entries. And the open question is this: if your future is already pledged, how much freedom do you really have? And what would it take to reclaim it? If this video challenged you, share it. It's not because it's comfortable, but because it's necessary. Subscribe for deeper breakdowns of the systems shaping your life, and leave a comment with the one question this raised that you can't stop thinking about. Because the first step out of any invisible system is realizing you're inside one,